Hello, this is Manesh Patel with the EIA Capital Group. This video is to answer the question a lot of people have been asking me: how is Ichimoku related, Elliott wave theory, Fibonacci, and Gann? Okay, so let's go. First, we'll go for a disclaimer. Basically, state that this is for educational use only. This is for all the charts are either in Thinkorswim or TradeStation, and the music in the background is guitar. Okay, here are my contact details. You could contact us through eiicapital.com for our various resources from discussion boards, futures, wikis, and everything else. Okay, so let's go look. A perfect example would be pound USD on a weekly time frame this week. Today is basically September 19th. So I'm going to basically go through here, kind of show you some things on where you could pretty much relate Elliott wave, Fibonacci's, and then Gann, JW Gann, into everything in Ichimoku and how it's all built into Ichimoku. Okay, if you're an Elliott wave theorist, most people, if you've been taught Elliott wave, most people pretty much teach you how to trade not the institutional wave, which is 2 to 3, but more the 4 to 5 wave, which is the retail wave. Okay, so let's go through and look at this chart. And if you look at this weekly chart, you could kind of draw, there's the, well, let me draw the pencil, trend line. If you draw this, this is basically 1 to 2. This is your 2 to 3. This is your 3 to 4. And then this is your 4 to 5 right there. Okay, now let me color code these a little different color real fast. Reason why is people probably can't see it, and we'll make it a little thicker too. Now some people may be arguing with me and they're like, wait a minute, what about the 5 wave? It's not completely right. Well, depending on where you learn Elliott wave, there's different theories on the 5 wave, how far it goes in regards to the 4. And we'll talk about that in just a minute. I'm just going to sit there and set this up first. Okay. I could have done this beforehand, but I want to do it live so everyone could see exactly what I'm doing and why. Okay. So if you look at this, this is the 1 to 2, 2 to 3, and so forth. Okay. And just so that, let's put some notes here. This is 1. Okay. This right here is 2. This right here is 3. This right here is 4. This right here is possibly a 5. Okay. Now, some people sit there and say that 5 needs to be right at 4. Well, depending on where you learned your Elliott wave, the 5 could be a little short of this 3 wave right here. Okay. It could pretty much come down there, or it could even go below that by a Fibonacci of 1.27. There's different theories of where that 5 wave pretty much ends, but you know, there's in this scenario it ends there. Okay. Now, if you look at this, okay. So if this is Elliott wave theory, so this is mapping out 2 to 3 and so forth. So you could see from here, once it breaks out of the cloud, you could see that you could look at opportunities to play the 2 to 3 wave, which is the institutional wave. Okay, a lot of people don't teach you that, but with Ichimoku, it really helps you to easily recognize opportunities on playing 2 to 3 waves. Reason why is you look for opportunities as soon as it breaks out of the cloud, then start looking for opportunities for it to start trending, and if you capture it, you're going to pretty much capture the 2 to 3 wave. Okay, once it's in a pullback, which crosses the Kijun-sen, it now has a pretty much in a pullback mode, which is the 3 to 4 wave. Okay. The ideal scenario is where it gets to the cloud. In this scenario, since we're looking at bearish, it gets to this top of this cloud, and a lot of scenarios will come out of it, but pretty much stays around this top of this cloud. Once it gets there, that's typically the 3. And then what happens is it sits there and it'll come out of the cloud. Once it comes out of the cloud, then it's going to be the 5 wave that's forming. Okay. Now that's the Elliott wave theory. In here, pretty much it fell short, didn't get all the way down to the 3 wave at all. It may in the future, but right now it doesn't. So this looks like a possible 5 right there, where it's ending right there. Okay, and the reason why it says it's possible is because we have not gone above the cloud yet. Once we go above the cloud and we've closed above it for about 3 bars, then I could say that this 5 is confirmed for sure. Okay, and then at that point we're entering an ABC pattern from there. Okay, so that shows you the Elliott wave built into Ichimoku. If you look at Fibonacci, it's all built in here too, because if you take from this thing here from 2 to 3, this will be exactly a 50% retracement. And if we draw the retracement lines, you could see right here, this is roughly, the cloud is roughly telling you the 50% retracement. So you could see this value right there, the cloud, is the 50% retracement right there. Okay, so that's a Fibonacci value right there, where we bounced off. This right here was the Fibonacci 50% replacement right there. Okay, I'm going to delete that, but I'm going to draw a line there and show you that this was a 50% retracement right there, and I'm going to mark it real fast. Okay, so I'm going to mark that guy right now and basically say this is a 50% fib retracement value. Okay. Okay, so we've pretty much drawn a Fibonacci retracement there. Now, if you look at this guy right here, okay, you could sit there and draw another Fibonacci retracement. So watch this. How far did that guy come down? And if you look at him, he basically, you can't see it, but it's 88.6 for retracement. So this guy right here, let's draw a price line. The 5 wave was exactly an 88.6 retracement. Okay, so you could see that basically that was an 88.6 retracement. Okay, now what am I doing? What I wanted to show you was in the clouds, these clouds, the Ichimoku indicators, all of them, especially the Senecal B, they pretty much fall right on top of the Fibonacci retracements. In this scenario, it's 50%. In a lot of cases, it would be 62.1. It could be other Fibonacci values too. Okay, so all the clouds, all the other indicators that basically represent the range for a certain period, they basically fall right on Fibonacci values completely. So you don't have to sit there and draw Fibonacci's at all. Pretty much these are the same support resistance that Fibonacci gives you. Okay. The other thing is, if you study Gann's work, you'll notice that he says where a trend will end for a bearish scenario when the next pivot right here is basically 88.6% retracement, which forms a higher low than this guy right here. Okay. So according to Gann, this right here stopped at 88.6% retracement, and that now indicates a possible trend reversal is about to occur. So if that's the case, then the pound, as soon as it breaks out of this level, is going to sit there and now start either consolidating or it's going to start going into a bullish trend scenario. So it's going to be interesting to see what happens, but we'll wait and see, and we'll follow up with this video. But you could see that basically J.W. Gann's Fibonacci value has been met here. As soon as it got to that value here, which was pretty much a little below this bottom of this cloud right here, okay, got there, and then we stopped there and yanked all the way up, got to the cloud here. Now we've pulled back, and it looks like it's setting up to go bullish. Okay, so this is how pretty much you could relate Fibonacci, Gann, Elliott wave into Ichimoku. Okay, if you have any questions, you could post them on our discussion board at kumotrader.com, where you can find that from eiicapital.com.